All right, all right, all right. And good evening, ladies and gentlemen. Welcome, welcome, welcome to London Calling. And we are going live from Las Vegas, Nevada. We're trading live the markets, and we are trading the pound versus the Australian dollar. And we have our two charts. We have a 5-minute chart on the left-hand side, and on the right-hand side, we have a 1-minute chart. Again, my name is Dr. Greg McLeod. I am the CEO and founder of the Elite Traders University. And we got long right here down here at the one spot 93100 area. And we took about 10 positions there. And so we're looking for price to hit on back to the old high, one spot 9335. And so we're moving on up like George and Wheezy. We have a 21 and 13 moving average. Blue one's 21, 13 is the red one. And we have some angle and separation pointing up. This trending type of system. That's our entry. Nice razor entry. Very little pullback. In fact, no pullback. Other than the spread, we had no pullback. And higher time frame chart, factor of 5, bigger than the previous one. And so we are looking for a move to this area. This is our target area. So we have our risk reward kind of set up here. And we can actually move our stop into, so we're looking at that. So this is roughly 6.25 to 1 risk to reward. Yeah, that was our entry right there, right? And so we could actually move our stop into the money, right? Move our stop loss. We've locked in we've locked in profit. We're locked in about 3,000, a little shy of $3,000. So we have risk-free trade going on right now. Our stop moved in the money, and so we just let it move on up. We're currently up 6,900. And let's see if we can move up. And if it does, if we get stopped out, then we get stopped out of profit. That's a really good way to be in the market and having your stop in the money. And so you can leave the computer, go to the bathroom, take a nap, go to sleep, whatever, and either hit your target when you wake up, or you are stopped out with money. So it's a risk, quote unquote, risk-free trade. Anything can happen though. You could have some big catastrophic event like some type of like the 2008 meltdown where spreads gets super wide, and the price can gap through your stops. And once it does, and your stop order is a market order, which will not be filled until it's, until there's some other liquidity on the other side. It's going to take the other side of your trade, right? So that's what it's not, not all brokerages have guaranteed stops. So we're kind of boring now. We'll flatten out. It's 2:22 a.m. on the 24th of January, 224, right? Nice. And I don't know if there's people in the chat box, because I'm going to refresh the screen, see if the chat comes up. Because one person's watching. That may be me. Okay. So let's see. Let's put a little music on. Maybe we can get a little bit of music and put in the background. And that might be kind of interesting, right? It's really going down. We had to add another position in there. Okay. Okay, we guys are still there. Yeah, having little internet issues here, and trying to. Okay, we're still here. Hope you guys are still here. And close up some of these applications that might be using a little bandwidth here. Okay, we're still okay. Close this up. Okay, we're still moving our way up. Here is our 5-minute chart, still moving up. Yeah, we got long at one spot 91310. We're at 324. We're looking for a move up to 335. 2:31 a.m. Eastern time. But it's 11:31 Pacific time. It's a great thing about living on the West Coast. It's, London session probably around midnight. And it's 3 a.m. Eastern time and 2 a.m. Central time. Sometimes instead of moving the stop up, what I usually do, like if I'm on MT4 or C Trader, is to take partial profit, close out part of the position. But the way TradingView handles it, it averages the entire order. It says closed position, but it's now like closed part of the position. Trend line break wasn't very strong, but we will see if R. We just moved our stop into the money. We get stopped out. We get stopped out $2,381. Lots of activity on the lower time frames, but if you look at the higher time frame, you notice that there's nothing going on, right? Just a little pumping up and down of the wick. But that's a very strong three candle uptrend. Oh, well, that's it. We got stopped out. Well, that was quick. And it saved us more of our profit, right? Interesting though, it's moving, usually we move it if it moves very sharp like that, it gives us another opportunity to buy the dip. Actually comes back into our entry, gives us another chance at it. Look at that. It's totally like collapse, right? Right back to the line. Let's see. Another assault of the line. What happens if what if we just went in there, catching a falling knife? That's that's a really long wick there. There we go. We call it dead cat bounce. So even if a dead cat thrown out the window will bounce. So we're looking for a bounce. See if we can get a 23% retracement bounce. That takes us, we're almost there, right? 38% retracement gets us out at here, right? 50% retracement gets us out here. Let's see if we go right back to the entry of 618. So you can see the bounce, price dropped, hit the bottom, and then we got long at the wicks. That's 50% retracement. Typical retracement's the 38% retracement, which would is it right there, right? So risk management here with those long wicks, got a long tweezer bottom there. The price returned to the low. Oh, we stop somewhere in here and take off. So we have a retest. Maybe that's all the rebound we're going to get. Here we go. We have a double bottom, breakout from consolidation. And back toward this 38% retracement here at one spot 9310 after touching down at support at the whole number round number one spot 19300. So we have a retest of the low and see if we can break on through to the other side, break on through. I know we have a pretty major break on the 15-minute chart. Probably not so big on the, well, it's pretty big on the 30-minute, 1 hour. We have a little bit of a pullback trend line break of this old trend. It's been going. We were talking about trend age. And if you look at it, this trend has been rolling, since 6 o'clock, 6 p.m. Eastern time. And we're making a slightly lower low. A new session low. And another new session low. Okay. I mean, it's like just a few pips there. Starting to are we gonna get a bounce? Yeah, they just gave us a little bit of 23% retracement, and now we're just making the new low here. deep in the value zone here on the 1 hour chart. Entries at one spot 93008, and we're now at 287, 290. Drawings. It's a long wick. Usually get some type of a rebound in that long wick, and that takes us to fib 618 comes in at 9283, which is that line right there. Oh, it would stop the 38, and it did for a little bit, and now we're working our way down to the 618. And that's probably the Fibonacci of last resistance. I mean, there's a 786, but if it gets that deep, it's probably going to be a full retracement, and you want to bail on this trade. But if you go to a 4 hour chart, you can see that we are still in a really massive uptrend. And this is just a little bit of a blip in this larger trend. Buying coming in before the Fibonacci, which is encouraging. And this is a 15-second chart, so it looks a little bit exaggerated. Like, oh, look how big this is, Greg. Okay, so right now we're at 290, and this is 30. So this is 10 pips. This is just a 10 pip move. So I know it looks a lot worse than what it is. Of course, like Asia ending and London coming online. So let's see if we can stay above the 618. The initial shake and bake, shake them out, and then take it higher. So what we're looking for. I was will agree it got in, it got out in a nice spot, and thought it was going to basically catching a falling knife, and then it fell a little lower than what I anticipated. Thinking those long wicks would hold, and we get a little bit of a bounce back up to at least halfway of the drop, but then it gave us another leg. Again, that's another 10 pips down. In fact, I was actually looking for a move back toward the 193.98 area. But as we get as we close into the London Open, this could be the Frankfurt fake out. Germany opens first. Sometimes you get a Frankfurt fake out, and then you see a retracement back higher. So that might be something that might be happening now. My initial target was the old high. Sorry, we already got still midnight. It's almost midnight here. First target there, and then the second target would be up here at the spot 9392, and the stop loss, it'll be a pretty big stop loss. I'm looking for maybe that low, and that's like a 1-to-1, so I'll probably do something like that below that swing low there. Let's see if we can pull up from there. Are we going to leave a mark, or we're going to, it's in line with trend. I mean, as long as the trend keeps up and we don't break that low, we should have a third wave that either retests this area or takes out the high. Okay, so we got about 10 minutes. We're probably not going to cover all this territory in 10 minutes, but be nice to see it going in the right direction. And I've fired off so many shots over here. I'm not going to add any more. I'd be like, yeah, you could dollar cost average in here, but and that would lower my break even point as well. We could do that. That lowered my break even down here. This is the 4 hour. In the daily, daily's been like a rocket. I mean, this look in line with the trend. This little red thing is just that little wick. Not much going on there. Right. 9 minutes. Thank you for joining. My name is again Dr. Greg McLeod of the EliteTradersUniversity.com. You can go to our website, www.elitetradersuniversity.com. You can also go to we have a really vibrant and growing group, Facebook group, which I'd like to invite you to join. And our group is called the number 4, the letter X Cash Machine, Forex Cash Machine. And you can join my free VIP Facebook group. We have tips, we have strategies, we have news and different educational resources to help you become a successful trader. Okay, we got about 8 minutes to 3 for the London Open Eastern time, 3 a.m. Eastern time, and 8 or 7:53 London time. Either a Frankfurt fake out. Frankfurt took its down, and then now London comes back and fades Frankfurt. Almost to break even. mistake traders make is they see it dropping and then they go, oh, we're going to trade in that direction. Then they wind up flipping directions and then price hits back up. When you just look at the higher time frame is saying it's going up. Now, I'm not using traditional candlesticks. I kind of checked out of the candlestick world, you know, Doji and Harami and, all that stuff. I just want to know what direction is price going? Green for up, red for down. And I really don't care about the little patterns in between. It becomes a lot of noise, a lot of distraction. So I use something called Heikin-Ashi candles. You go up to the top here in Trading View, and you can see the different types of candles, normal candles, right? Those are regular candles. Ugh, haven't seen those in a while, but Heikin-Ashi is actually they were invented by the same guy. Oh, but I like these. They tell a nice story. They show the epic battle of the bulls versus the bears. Roar. 5 minutes. Got a nice flag pattern right there. We're flagging out. Yes, we are. We are flagging out. Okay. Salute the flag. Um, ooh. Because you almost have we almost have an inverted head and shoulders pattern where we have a shoulder, a head, and another shoulder forming. So there'll be a bullish formation. This back we have maybe some type of a neckline. Move this out of the way. We have the distance from the head to the neckline. And if we can break this, we have a nice target up here, like 193.21. Took, took the distance, clone it. A measurement objective. Using that measurement objective that we teach in mentorship, we can take the distance of that head to the neckline and create a projection target, which so rule of symmetry takes us right back to the breakout point. We need to the neckline would need to break to confirm price coming back, tagging that one spot 9296 area. And we are looking for price to break out. Two minutes before the opening bell. Sometimes you get big volatility, big price move at 3 a.m. Eastern time, 8 o'clock London time. In fact, we can zoom in. Let's see. Again, we're looking at a 15-second time frame. 2 minutes. Retest. It's awfully drippy. Like swooning. Here's our inverted head and shoulders pattern. Looks like a ghost upside down, right? And that's our neckline. We take the distance and we can project it. Really drippy. And if you're looking at this as some type of a right shoulder, it's like a Quasimodo, kind of like he's like Hunchback of Notre Dame doing a headstand, right? Okay, and 3 o'clock. Here we go. Right on schedule. Let's see if we get some additional volume in here. So what's happening is the Aussie dollar is being sold off and the pound being bought. Ding, 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 opening bell. I can ring the bell. All right. Not a super impressive move. Euro dollar might be a little bit better. A little bit more of a surge on euro dollar.